Hey everyone, and welcome. Today we're talking about something huge happening in Tokyo's property market. It's a genuine tectonic shift. It's a really strange story where prices are skyrocketing, but it's not a sign of a healthy boom. In fact, it points to a much deeper structural problem. The old rules, they're out the window. So let's dive right in. So to kick things off, let me just ask you a question. Picture this. You want to buy a brand new average condo right in the heart of Tokyo's 23 wards. What do you think the price tag on that would be today? Just take a guess. You might want to sit down for this one. The answer is a whopping 113.8 million yen. That is a 27% jump in just 1 year. Now, on the surface, you'd think, wow, the market must be on fire. But believe me, the real story is a whole lot more complicated than that. Yeah, here's the twist. That giant number, it's not a sign of a healthy market with tons of demand. According to our source material, it's actually a massive danger signal. It's a symptom of a really deep crack in the foundation of Tokyo real estate, and it's changing what it even means to own property there. Okay, so what's the real reason behind these absolutely eye-watering prices? Well, I can tell you, it is probably not what you think. At the heart of it all is this concept called a cost-push deadlock. Now, this isn't your classic case of tons of buyers fighting over properties and driving prices up. No, it's actually the opposite. It's the cost of land and construction that's gone through the roof, forcing developers to set prices that are just completely out of reach for the average buyer. There's a total disconnect. And this slide right here really shows you what that looks like in the real world. Look at this. While prices shot up by nearly 30%, the actual size of the apartments got smaller. So you're paying way more for less space. It's basically shrinkflation, but for your house. So if regular home buyers are getting completely priced out of the market for new condos, where are they all going? They haven't just vanished, right? They've just shifted their focus. And this chart shows you exactly why. Just look at that huge gap, what our source calls the 100 million yen wall. A new condo averages 113.8 million yen. But a used one, 67.6 million. That is an enormous difference. For anyone looking to buy, that's not just a number on a chart, it's a massive fork in the road that changes where they even begin their search. And here is where things get really wild. You can see the whole center of gravity of the market has just shifted. That little bar on the left, that's the entire yearly supply of new condos. The bar on the right, that's the number of used condo sales in a single month. The sheer volume of action in the used market now just completely dwarfs the new build sector. It's not even close. And that brings us to this really powerful quote from the analysis that just perfectly captures what's going on. Used is no longer the second choice. It is the primary battlefield. This isn't a backup plan for people anymore. It's where the real game is being played. So with everyone flocking to the used market, let's circle back to the new builds and see what this means for them. And honestly, it's created a really dangerous situation. Take a look at this number, 63.1%. This is what's called the first month contract rate for new condos. Think of it like a vital sign, a pulse check for the market's health. It tells you what percentage of brand new units get sold in their very first month on the market. And here's the context you need to understand that number. In the Tokyo market, anything below 70% is considered the health line. So at 63.1%, we are officially in the danger zone. It's a huge red flag that these expensive new properties just aren't moving, and that creates a ton of risk. So this is the standoff, the stalemate we were talking about. You've got sellers, the developers who are totally stuck. Their costs for land and building are so high, they literally can't afford to lower their prices. But then you have the buyers who are completely priced out and can't possibly meet those prices. It's a total gridlock, and there's no easy way out. Okay, so given this huge structural shift, what's the new playbook? What does all of this actually mean for anyone who's involved in Tokyo real estate? Whether you're buying, selling, or building, well, our source material breaks it down into 3 key perspectives. First, for developers, it's now all about survival of the fittest. Who has the financial strength to just hold on to all that unsold inventory? Second, if you already own property, especially stuff that's not in a prime central location, it might be time to start thinking about an exit strategy. And third, for anyone thinking of buying, the entire mindset has to flip. Forget the obsession with brand new. The new game is all about tangible things like management quality and, crucially, resale value, which you find in the used market. And all of this leaves us with one final massive question. This isn't just another dip or boom in the market cycle. It's being described as a structural collapse of the old way of doing things. So how will this fundamental change in who can afford to live where and what kind of property actually holds its value? How will that change the very future of Tokyo itself? That's a question we're definitely going to be keeping a close eye on. If this breakdown helped you make sense of the new reality in Tokyo's property market, please do me a favor and hit that like button and subscribe to the channel for more explainers like this. Thanks so much for watching.